Good morning, Paul.
Good morning.
Thank you for joining us at EMEA 2020.
Well, it's good to be here. It's always a bit nervous to have this completely virtual surrounding and hope that it works, right?
So do we, and we're very glad to have you here today. So without further ado, we will hand across to you to speak to the audience.
Okay, great. Thank you very much, and thank you all to those that tuned in. I'm speaking from my Brussels apartment, where I'm in sort of lockdown, awaiting my corona test. But still, we are able to communicate. So please, if you have any questions, try to ask them, and we will have time for that. Is ESG a buzzword? Well, maybe it is. I recently heard that ESG is a mega trend also, which typically means that it is a buzzword. But in Brussels, the thinking is very much that we need to have a double blow this time. We need to spend money, invest to support our economy, for the recovery, and at the same time make the transition towards a sustainable economy. That's the thinking. So we need to be double effective, so to say, a double blow. And in that, we need to think about public investment in the modernization of the economy, digitalization, and sustainability. But we also need to make sure that private investment follows and is crowds in, so that public and private investment, let's say, work together to restore our economies and to make the transition of our economies. And that has already been started. Private investment was already undergoing changes. The Commission produced a Sustainable Finance Action Plan in 2018, hoping to set the European standards, but also potentially global standards. So it has already been put in motion, and our legislation has already been adopted, mainly disclosure and taxonomy. Now, these legislative changes very much focus on transparency, and I will argue that transparency is absolutely essential for markets and market participants to come to sustainable investments, but the transparency will not be enough. But let's start with transparency, because trading decisions are based on data. Without good data on ESG, it's not possible to base investment decisions on sustainability. And like I said, in our transition to climate neutrality, we expect a lot from the financial sector. But are these expectations realistic looking at the data? We know that ESG ratings differ significantly. In fact, I've heard the correlations. The correlation for environmental rating is 0.46. For social, it's 0.33, and for governance, it's 0.19. Making there are many standards out there, and you can take your pick. If you want to be sustainable, just pick the standard that really suits you. So that's not really helpful, and it has been a situation for many years already. There were many standards out there producing different results, and it doesn't really help. And this is also why the Sustainable Finance Action Plan started with trying to harmonize the standard, standardize the standard. So that's the first one example. For if you look at Tesla, it's been rated very high by MSCI, but very low by Just. The difference being, is it environmental or social? And that is important because sustainability, and especially the European Parliament, pushes that idea very strongly. Is, in our view, a broad concept. It's not just environmental, it's also social. So when we discuss Tesla, what about the social condition in lithium mines and the environmental cost of mining that? Should better be included? I would answer yes. So for the markets to work, for asset managers and pension funds and insurers to take direction, we need to standardize the standards. And that can be done in different ways. And I think supervisors, and we will see we have later on discussion with supervisors. I think supervisors plays a crucial role here, because they have to look at how ESG ratings are done and make sure they do not facilitate greenwashing and use a thorough methodology. Like I said, it cannot just be done through supervisors, which are crucial, but also by standardizing methods. And this is what the disclosure regulation and the taxonomy regulation try to do, a clear framework so that the financial sector knows, let's say, what is sustainable and what is not, what is green and what is not. This is what really should help the markets to and the investors, the participants on the markets, to guide their decision. And of course, Europe is taking a lead here. I think the idea would be that Europe is taking the lead here and will take the lead here, but we very much hope that other countries will follow, that will become, let's say, that it will evolve towards global standards. Now, transparency for investors that have been pushed so far will not be enough. Very well. Well, the most obvious reason, of course, that we don't need for investors to be to disclose. We need also the corporates to disclose, and this is what you can expect from the European Commission in the year to come. Pretty soon, I hope it will appear this year. But and that would be a recast of the non-financial reporting directive, because you need good data at the corporate level to make sure that investments are sustainable. And I think this is an important proposal that will come forward. But even then, even if there's disclosure and transparency on the side of the investors and on the corporates, this may not be enough. Because when I say we need to standardize the standards, we must realize that we cannot put everything into a standard. It cannot be a ticking the box exercise. I've seen examples which involves land grabbing or child labor. Do we have a metric for land grabbing or for child labor? I don't think so. So we don't have a standard metric for that, let alone high frequency data on that. But it's certainly part of the sustainability that we try to avoid land grabbing and we try to avoid the use of child labor. So these risks are real and important, but cannot be standardized. And still, we want them to be taken on board. So that requires that there must be a feeling of responsibility and also accountability. How do you take these risks into account? And it's not just about land grabbing and the use of child labor. I think it's more broadly. You want to look at social working conditions as well. What metrics do we have for that? And this needs to be taken into account. And this is why in this discussion so far, I've very much argued that we need more than transparency, but we also need responsibility. In fact, what I would like to see that sustainability, ESG, is a discussion in the board of the corporates and all the financial institutions, that the responsibility is really felt. And that's why I very much push for a due diligence frameworks, which requires you not just to assess the risk, but also that financial institutions and corporates find a way to prevent these risks, sustainability risk, or to mitigate this sustainability risk. And that includes, by the way, because there are different types of sustainability policies, not just picking a portfolio, but also engage with the corporates how to make a transition towards sustainability. So my thinking is not just about transparency, it's also about responsibility. But let me let's take a poll on this and let's see how you see things. I hope there's a poll available. Will the markets, capital markets, shift towards sustainability? Is it a buzzword, or can we expect more? And I hope the organization has a poll ready to be asked to you. And I'll wait a sec when I can get confirmation for that. Okay. I don't see a poll appear, but let me continue, and maybe the poll will appear later on. I would like to argue that transparency is not enough. We also need to ask the fundamental questions whether financial markets are currently able to fully integrate the social and environmental cost of doing business. And I think they are not, for three main reasons. First of all is the obvious one. We need to price externalities, with the price of carbon coming first to mind. And indeed, Ursula von der Leyen this week said in her State of the Union that the European Commission wants Europe to have stronger targets for 2030. She announced that the European Commission wants a target for a reduction of 55% of carbon emissions by 2030 compared to 1990. It is. Sorry for that. Now, the target is fine, but what is the instrument? Well, one of the instruments is very obvious, and that's putting a price on carbon. This can be done by a carbon tax. The Dutch government announced this week they will introduce a carbon tax, which will rise over time. But and of course, we have the carbon price through the emission trading system, and we need less carbon emission rights in this system to make the price rise. So yes, we need to price externalities. And as an economist, I was trained as an economist, worked many years as an economist, I completely concur with the logic of pricing externalities. But as a politician, I also found that this sometimes is an excuse for corporates and investors in those corporates to shy away from taking action, waiting for pricing of externalities, in this case carbon pricing. In fact, putting the responsibility at the politics, well, they need to price externalities, and until that time, and so on. But let's face it, as an economist, I can also say we will not be able to price externalities throughout the entire system. There will always be missing markets, incomplete markets. And when you think of that, you need corporates and investors to take responsibility. They need to take into account the effect of their decisions on the environment and on society, on people and planet. We cannot wait for for pricing of externalities, and it's a sort of, well, Thomas Friedman logic to say, well, it needs to be in the price, and the corporates need to aim for profits. I would argue, well, this is sort of textbook analysis. In reality, there are tough decisions to be made, and I expect them to be made by investors and cooperate. And I would very much like to see much more responsibility from corporates and investors. Like I said, we want to have the discussion of the board of the institutes. And of course, we see that because to my mind, all of a sudden jumps the letter that are written by Larry Fink. Of course, BlackRock is an important investor, but we don't need the words, we need the actions, right? And we have seen that BlackRock has not been very helpful in supporting climate-related motions at shareholders' meetings. So we just need the word, we need the actions. So apart from that externalities are the price, what we do need is that we have investors and corporates that are not always concerned with the short run, but also dare to take a look at the long run. And this is what we see, the short-termism in financial markets is sometimes hampering the long-run decisions, which are good for people and planet. One of the best examples I think we have seen is when is Unilever and a takeover attempt by Kraft Heinz. Paul Polman was really aiming for Unilever to be a sustainable company. In short, the takeover attempt by Kraft Heinz forced him and forced Unilever to cut back in cost and to raise the profit margin. The pressure of the takeover forced Unilever to change course, and this shows that we don't need just need responsible corporates. We also need responsible investors that dare to aim for the long term. And responsible investors, I already mentioned BlackRock and Larry Fink, need to engage and make sure that the changes in the corporates are in line with sustainability. As an economist, I'm sometimes a bit surprised, so to say, not appalled as a politician, that when I look at remuneration policy, it's very much still about stock or even stock options, and that the remuneration packages do not contain measures for sustainability or other metrics. In fact, in the Netherlands, it's the case that the remuneration packages should include at least half of non-financial metrics for that reason. And I think we also need to take a look at that. But it requires, what we need is responsible investors that engage with corporates how to make that transition and to make sure that the corporate is not just there for the profit, but also for people and planet. But to arrive at that, we need government intervention. We need to integrate long-term thinking into trade markets. I don't think quarterly reporting helps, and I would very much like to see engaged investors, shareholders. So I would also very much like to see that shareholders that are in there for the long term have more voting rights. Making sure that the dispersed ownership of firms doesn't really help doesn't really help for investors to be responsible, and and like I said, responsible corporates need responsible investors. And I'm also hoping very much that on the investor side we see more cooperation among investors to push for this idea of sustainability. I don't understand why if you want to push in this direction, you need to you don't coordinate more. Why don't we have a union of investors that vote en bloc for ESG issues? And of course, we need to ban certain, in the end, certain activities or methods. Like I mentioned, I think in the end we need a change in the remuneration packages. I don't think it should be based on non-financial metrics as well, not just on financial metrics. You can't say I'm here for people and planet, and it's not included in the remuneration. And in the end, we should also look at ways for blocking investment. For solid fossil fuels is almost one of these examples. And this is a discussion very much also at the European level. No, you shouldn't invest in coal. That's pretty obvious. Investing in oil is also a suspect. But the discussion is moved on to what's gas. Is gas a transitional energy source, or isn't it? The fear is, of course, if you invest in gas now, that might be beneficial for the climate in the short run, but let's face it, the investment has a long lifespan, and you maybe end up with an outdated infrastructure again in 2050. So even investment in gas should be under very strict conditions. And like I said, it's not about just about we need responsible investors, making sure they are there for the long term. We need changes in the corporate governance, remuneration packages, but it also requires that that the responsibility is being felt, and this is why I very much push the idea of due diligence. Not only assess the risks, but also be accountable for the decisions that they make and the sustainability risk that involves. And of course, at the EU level, let me finish here. I think we can expect actions in this direction. Von der Leyen already made clear in her speech that she wants to develop a green bond standard. That given that at least 30% of all the expenditures should be sustainable, this green bond standard helps to finance this type of expenditures and shift the portfolio towards these type of expenditures that are deemed sustainable. But I very much also hope that we will have something like sustainable corporate governance, including limitations on remuneration and the due diligence framework. Now, coming back to where I started, I think we've seen a push for transparency. I very much hope for a push for more responsibility, both on the investor side and on the investee side, and that we see a sustainable governance framework. Because what we do need is that we have public and private investment working together to support the recovery and at the same time to make the transition towards a sustainable economy and society. And it's very clear that it cannot be public investment alone. We need this change in private investment. So I would say that ESG is a buzzword. I very much like it. It's a buzzword, and that means it's on top of people's mind, but it's a buzzword that is here to stay. We will discuss this now. I'm happy to discuss this with you. I'm waiting for your questions, but I very much hope we will be discussing it 5 and 10 years from now also. Thank you very much.
Thank you, Paul. That was a very interesting speech, and clearly there's a lot of key themes and ideas that we need to digest, but I would ask people, if you haven't yet gone to the Slido question, please do click on and vote now. Paul's question to you was, will the financial market shift towards sustainability by itself? Yes, because there's strong consumer demand. 35% currently believe that. Yes, because the financial sector is doing this already. Just 15% of Paul gave that as their response. And no, the drive for profit remains dominant. We need to take government action. So 52%.
There it is.
Ignore that. That is the old Slido. We need the new Slido question. But 52% at the moment, Paul, are saying that we do need government action. Now, while we're waiting for the questions to come in, one question that I have for you is obviously ESG and climate risk has been front and centre, not only in Europe, but also in the US. We obviously have CFTC Commissioner Rustin Brenham joining us and joining you for the Global Regulatory Panel. And actually, in their report that they issued last week, the very first recommendation was actually pricing carbon. Now, you contrast that with the Department of Labour, and you probably didn't see it because it only came out late last night, but the SEC, Hester Pierce, actually described current discussions as an attack against principle-based regulation by forcing greater disclosure. But do you think we've actually reached the point where to push the industry where it needs to go, we do have to have that level of transparency and disclosure that you call for, and actually the CFTC also call for in their report?
Like I said, we need to be double effective this time. And so for me, it's end, right? So I think pricing externalities is especially the carbon price, is crucial. At the same time, I very much realize it will not be enough. Because what is the price of biodiversity? Biodiversity is part of sustainability. Is there a price for biodiversity? There's not, as far as I know. So we need to develop metrics for biodiversity, and it needs to be included. And then again, even these metrics may not fully capture the impact that doing business has on biodiversity. So that's why I also think it's not just transparency, but also responsibility that needs to be enshrined. So that when we say, and this is of course a discussion that is interesting because it's changing. We have seen the American industry of roundtables say we break with shareholder capitalism, we go to stakeholder capitalism. I love those words, but let's face it, these are just words, and that's why words should bring action, and actions speak louder than words. And this is what I'm also looking at to enshrine the responsibility for people and planet in corporates and in the FST companies, but also on the investor side. So
okay, can I just stop you there though? Because one of the points that we've had in terms of there are a lot of asset managers who have very strong stewardship policies, like working with companies, working with investors to actually move us towards more sustainable finance without it being a disruptive policy. Now, you know, what are the challenges there in that are you actually saying to them that they can't invest in certain stocks? I mean, that in itself is going to, if you're talking about banning certain things, how will that actually play out in practice? And could that lead to greater financial market disruption, inadvertently, of course?
Well, I know that banning sort of scares people, but I think it's a logical consequence of what we aim for. But to be very clear, I think stewardship is crucial. I think what we need is the bulk of the companies still need to make the transition and can make the transition. So we also need time and effort at the same time to make this transition. Again, this is not something that you can standardize completely. But I get suspicious if you just talk about stewardship and there's no exclusion as well. So then I wonder if that's credible stewardship or just a way of postponing what needs to be done. So in that sense, so this is why I know that some people are rattled by the word banning, but let's face it, it's the logic of the transition towards sustainability that we at one point simply don't invest anymore in, well, oil is an obvious candidate, coal is an obvious candidate.
Okay. Thanks, Paul. So I think just a bit of a reminder as well, if you want to submit a question, please go to slido.com, put in hashtag FixEMEA 2020, and you can put your questions in live right now to Paul and really put them on the spot. Now, you know, we've got a question in, Paul.
Yes, and put me on the spot, please.
We're getting down a bit more into the detail on this as well, because we've got a bunch of traders on the line, and so what they want to be able to do is see how does this work. So the question in is, in your opinion, what is the next key step in wide-stream standardization of ESG?
Well, the next step, I think, would be that we need very much disclosure on the corporate side. We started with disclosure and taxonomy for investor side, but we need disclosure on the corporate side. Because I very much realize that all the traders, asset managers can't do their work, can't incorporate sustainability without this disclosure. Besides, we need to make some concepts. We need to develop some concepts and make them practical and pragmatic in a sense. For example, we have in the legislation do not significant harm. So you can invest in sustainable activity, and at the same time, people that work there are being exploited. That would hurt the idea of sustainability. So this is some which I think needs to be developed further to put that idea into practice. And at the moment, there's work done by the ESAs, the European Supervisory Authorities, to develop this further and to make it available to the market and the market participants.
Cool. So the questions are coming in thick and fast now, but just to remind you, Slido.com, hashtag EMEA 2020. We've got the next question up. Thank you for the interesting speech. In your opinion, what can more do in the EU taxonomy to provide more useful ESG data to support investment decisions?
Well, I think, like I said, it's a race against the clock, right? Like I said, we want to be as effective as possible from this moment onward, and at the same time, we're developing benchmarks under the taxonomy and, for example, the do not significant harm principle. So it's a race against the clock to try to make it more detailed. My concern really is, but maybe that's sort of points also to my political background, being part of the social democratic family. My concern is that the social will be underdeveloped, that will be too much focus just on green. And the green if you have a green transition, it will also lead to resistance among people. We have already seen that. So for me, any transition should not just be environmental and social. This is underdeveloped, I think. And sometimes simple metrics can be very helpful. When I speak to an entrepreneur, and the first things he tells me that he see that less people are absent from work, less people in his company are sick. I think that he has a very social company, because this is what he's very much involved and attached to his people. So this shows also the strength, I think, of that company, that he is willing to take care of them and they are willing to take care of the company. And this is building a strong company. Well, this kind of thinking, I think, is crucial to make the transition.
And obviously, I mean, the key thing with this is Rebecca and I have to deal with this in our day jobs when we're looking at the challenges of implementations, and there are, good high-level principles we're trying to outline. Is it there for the industry then to come out and engage in terms of the data points? Because after all, we have to implement this. So is that where we should be reaching out to yourself or to the European Commission? How should the industry be engaging to make sure we can get these data points and standards done in the right way?
I think it's very good to engage. What I see in the industry, right, there are interesting examples and there are really good efforts ongoing. And now I see these people or companies as the front runners that want to change the way they work and try to come with the data to show what we need to know. And so I'm always very interested in the front runners because they pave the way forward, right? So this is uncharted territory. We can do that, but we have to find our way. So it's very helpful if these front runners try to share their ideas and insights from on their way of working, and what I think that's very interesting. The part for the legislation is to make sure that the front runners that have shown the way are followed by the laggards, right? So that you try to raise the average by raising standards.
Right. So we've got
taking ESG mainstream,
yeah,
which is exactly what we've been saying.
So we've got more questions in. So we're going to do this thick and fast because I want to make sure everyone gets involved in this debate, and it's brilliant we're getting these questions in. So Slido.com, #FixEMEA2020. So first question. Given so much money is benchmarked to global indices, how can this standardization be brought to life? Is there currently a global standard, and can Fix help here?
Well, I'm afraid there's not a global standard at this stage. We will later on have a discussion also what is happening, for example, in the US. My observation is that Europe is in a leading role here with the legislation that has been done and that will come forward. But we try to very much to engage with others as well. There's an international platform on sustainable finance. That's a way for Europe to reach out to other countries, US, Japan. US is, I don't think, on board yet. And I think that's a very good way to make sure that what starts as a European standard may develop into a global standard. But we have to start somewhere. So don't hold it against us that we start with European standard, because we need some form of standardization. I think that's crucial for the markets to function.
Brilliant. Okay, so it's brilliant being in a TV studio because you have everything flashing at you saying we're running over. So I'm going to hold you to this. So we're going to have a quick 15 seconds issue. So I've got one which I think is really valid. The introduction of the PRIP regs has made many ESG funds unavailable to European consumers, as issuers don't want to issue kids. Can you improve this?
I'm not sure that I have every detail of this file. I think that the one that asked the question has a much better understanding than I have. What I would very much like to see is that that retail investors are offered green investment products as a default option. So we'll certainly look into that, because this will also contribute to the support that we have for sustainable finance.
So we'll take that away, and maybe if the person who asked that question could send an email to the Fixed Program Office,
please
make sure Paul
gets
in contact with you. One final one, which I think is a great one. As this is a global issue, how will the EU collaborate with US and China?
I think that's one for the next panel, is it not?
I think it's not. I think this is one for the next panel. I think the November election will be crucial in this.
Yeah.
That's the short
Not agree
answer.
more. Okay, all right. So without further ado, that means that we are actually moving on to our next panel. And that is the future focus of global financial policy. And we're very pleased to have a number of global regulators who are literally dialing in from across the globe to join Paul in the discussion.